Can you hear me?
Yes, sir.
Good afternoon. Good afternoon. All right. So I was listening to you. The information that you supplied so far, it seems a little incomplete. So I'll give you from what I gathered in your description. You're looking at a sell side imbalance, buy side inefficiency. The lower half has had back and forth delivery. No candles are left in the upper half of it. So it's qualifying itself as the market's heavy. And my understanding is you're asking how I would interpret the open portion that's still only sell side delivery, no buy side's been offered. Would I anticipate that? How would I anticipate that being used? It's in deference to where you're at for the range you're trading in. Okay, let me frame this out so that way it's going to be hopefully complementary to what your other listeners will understand from it as well. Just simply because there's a CIBI and the upper portion is crossed over to the downside, so there's a down close candle there. The longest separation with one single candle is only being left in the upper half of the CIBI. Wonderful, easy. The bottom half has shown its willingness to be heavy, as you would expect. We want to see order flow suggesting that, and that means if price were to trade up into that, I want to see a wick form, not completely close it in. It would be institutional order flow entry drill only, listen now, only if we're at 50% or below the targeted range. So you have an implied dealing range. When you're trading a short or a long, your target, and from where you enter, that range that price is going to traverse, if you're correct, that range should be graded. So you're going to put your fib on it, so 25% of the range, 50% of the range, 75% of the range, and then terminus, where you think it's going to go to target-wise. If you're shorting, institutional order flow entry drill many times is going to form at 50%, or basically equilibrium, of the implied dealing range, or somewhere between that and the lower quadrant, because it's got some place to go. A full return back up in that exposed area can occur in the early portion or upper quadrant to just above equilibrium of the implied dealing range that's bearish that you're trying to be part of if you're getting short. If it's above the initial upper quadrant, I want to see that stay completely open, have no portion closed in at all, and that would be a breakaway gap. Does that answer your question?
So just to be clear that we're on the same page. So we have a CIBI on the 15-minute. The lower half has had back and forth, up and down price action in it, and the upper half is a very one directional. There's no back and forth price action. If we see that and we're correct and on the direction, yada yada yada, if price returns above that 50% point or the consequent encroachment of that 15-minute CIBI, we only want to see a wick go up into it. And if we see a body laid up into that, are you saying that would invalidate the assumption of the trade?
No, I didn't say, and I didn't imply that at all.
Oh.
I gave you specific references by grade. In other words, before you're even considering that CIBI for any purpose at all, you have to have a draw on liquidity. Where's the market going to go? And that's the beginning basis of having a trade idea anyway. You got to predict. You got to predict where it's likely to reach for, because everybody that says that you're not trading with a measure of prediction is literally arguing through semantics. You have to know where you're targeting between where you're entering long or short. In this case, you're framing an idea. What I gathered was something bearish. If that's the case, we can't just limit our focus to just simply, there's the PV array. This is one of those things ICT talks about. It's a fair value gap. It's a CIBI. It's performing a certain function there. The lower half of it's seeing back and forth busy work with the candles, and there's never been any kind of body laid in the upper half. Before you worry about all of the details, the minutia of what that means, you have to know where that fair value gap is forming in proximity to where you think the overall market's going to draw to on a longer scale. So don't just look at, in other words, the fair value gap is not the model. It's not the target. It's not the stop management. It's just one component. It's a mile marker. So if you're bearish, if you're in the upper quadrant of where you think price is ultimately going to go to, I gave you very specific rule-based ideas to frame out the usefulness of such a CIBI. If it's already giving you heaviness and the bodies are staying in the lower half of it, so consequent encroachment to the lower half, that CIBI has seen candles laid inside of it, but it's not yet traversed into the upper half of that CIBI. So in other words, we still have what would be a smaller little CIBI now, right? Am I understanding what you're trying to ask me?
So, do you know what video I'm talking about?
Sir, I asked a very simple question. To get through your question, I
Yeah,
asked something to make sure that one single candlestick that's laid in the upper half of the CIBI,
yeah.
doesn't that in itself make another smaller sell sign imbalance, buy sign efficiency, or CIBI? Yes?
Yes, yeah.
Okay.
Yeah.
Now, the overall placement of that formation and price action, if you think that price is going to drop down another 100 handles, or we'll just say, keep it easy, say it's going to drop 100 handles from that area. If it's forming that, there's a likelihood that it's going to act as a breakaway gap, and there should be no expectation on seeing any complete closure of that. So it could be an institutional order flow entry drill there, but you want to see it stay open for the benefit of it being a breakaway gap. That's going to be further confidence that it's heavy, it wants to go lower, it can't even go back and fill that in. You don't anticipate that happening, okay, on every scale or quadrant of an implied dealing range, or where you think it's going to go to ultimately. In other words, in this hypothetical example, it's got 100 handles still potentially that can drop. Now, if it's doing this formation around 50 handles of what would be expected as a 100 handle drop, it's already moved half of what would be reasonable in terms of the trade whole terminus move. So the rules I gave you were based on that understanding. Just because there's a formation of the fair value gap, if you just simply look at it that way, you're robbing yourself of the understanding that there's a place, there's a time and place for these inefficiencies to stay open. And there's a strong likelihood that they will completely fill in. That's going to be around equilibrium, because you can go back and forth at equilibrium. Time distortion can enter the marketplace. It could be it closes near the middle of the range for that day, and it's also can consolidate there, and then it'll resume the following day or after 6 p.m. startup or whatever it is. If it's a Friday, you have to wait till the Sunday opening. All these factors have to be assumed as part of the equation. Simply just saying, just because it does this one function of leaving the little portion in there, would I expect it to be this, that, and the other thing? There's other things that you didn't mention, and even when I mentioned it, it's like you sidestepped it and you were asking me about a video. Forget the video. The whole conversation was what you just framed here. So I'm answering your question. I'm giving you a very direct response, but it's like you're looking for something else. Maybe you're looking to be confirming an idea or canceling some kind of a doubt or whatever. But what I gave you were very specific algorithmic principles utilizing the fair value gap, and when I anticipate when they should stay open, when they should partially close, when they should completely close in, and it still doesn't undermine the fact that it's going to go lower. Does that help at all? Because if it doesn't, that's the best I got for right now.
Yeah. I will read back. I will re-listen to the.
Yes. I think that's the best bet, landlord.
Thank you, Michael.
You're welcome. Thank you.
Michael, one quick question I had from the community here, and I thought it was a very good question, but the question was, how many open ranges are there, like, that we should concern ourselves with? I don't know. I thought that was a good question.
Well, how many trading sessions have I taught about?
Well, the three
Asian,
kill zones, right? Yeah.
Well, you have Asian, you have New York midnight. Okay, so that's trading new true day. Okay, so that's 2. Then you have London Open. That's 3. Then you have New York Open. That's 4. Then you have the equities, 9:30, 10 o'clock opening. Then you have the 1:30 in the afternoon PM session. So how many is that?
6.
There you go.
Beautiful. I love it. I think that was a good
Just
question for what it's worth.
yeah,
Someone asked that
yeah.
question.
It's
The follow-up question to that, and this is coming from one of your charters again. Just I'm perusing through some of these questions, but the question was: are there specific high time frame open ranges that one might concern themselves with? I mean, you mentioned the 2 o'clock one. I personally thought of that as kind of a harmonic kind of high time frame range myself, but how many high
could
time
you say
frame
that again?
ranges? Like you mentioned the six opening ranges that are really salient within your kill zones. And the follow-up question was, are there any high time frame open ranges that one might concern themselves with?
Not specifically like we're delving into it with the intraday perspective of it. I think this, if anything outside of intraday, you're gonna have to go to new day opening gap, new week opening gap, and just use the premise that those supply, and it's ample. If you're discovering, if the person's asking that and they're discovering things on their own, that's wonderful. But I'm saying that I don't have anything beyond that.
No, that's wonderful. I think you answered it fantastically. We've got our hands up. I've got my fingers crossed. We're going to hold our breath. I hope we get a intelligent question that is worthy of the conversation here. You never know with with these conversations. So, hand up. I'm going to go with the trades by the first. He's got his hand up. We're going to go then to Hunting the Wick as well as Market Oracle. Three folks who have their hands up, and then my boy Focused as well. But do you mind? Do you have a question for Michael?
Yes, yes. So my name is Dee from Nairobi, Kenya. First and foremost, before I make my question to you, Michael, just to appreciate you for
The
the immense contribution that you've made to the community.
Fight Club
And
rules. Fight Club rules.
okay. Sorry, kid. So my question to you, Michael, I was watching your breakdown yesterday, and you were talking about first stage reaccumulation, second stage redistribution, and got me thinking because I've been looking at it for a very long time. And I wanted to know how do we measure in terms of how much the price is going to retrace in terms of the reaccumulation, and how deep it's going to retrace before we have the second stage distribution. So just a simple question. Thank you, sir.
Okay. When you're looking at, well, let's frame a hypothetical example. Say we're bullish. We're looking at a 15-minute time frame, and say it's the Nasdaq. And it could be any market, but say just for the purposes of mapping it out, because we don't have a whiteboard here, and I'm not over top of a chart. It's a 15-minute time frame. It's Nasdaq, and it's traded down to a old weekly low. It's already repelled away from that. It's traversed higher. It's gone back up above the high in the last 3 days. So we've already seen purge and revert. Not that that has to happen. You could still be waiting for that to happen. But when it creates the inversion fair value gap on the dive down below the weekly low that it took, their sell side has been engaged, and the market has showed a willingness to want to go higher. If the gap, in this case it would be a CIBI, forms on the leg down before the stop hunt below the weekly low, once that forms, if price goes back above that, you want to see that always act as an inversion fair value gap. If the market doesn't come back to that and still keeps going higher, it can stay open. It doesn't have to trade back to it, but if it does, it must act as an inversion fair value gap. If it fails, then you have to abandon the bullishness until it proves it again. That means they have to make another lower low. The retracement question you had, how far would it retrace? It needs to stay obviously above that inversion fair value gap because it's a market maker buy model that's forming there. If you understand the schematic I outlined for the market maker buy and sell model, these retracements in the smart money reversal, the low risk entry, that low risk entry has to form above the turtle soup buy below the sell side liquidity that was taken in the weekly chart. So now you have two pieces of the puzzle right there. So now, would you expect the first stage accumulation, which would be the most deepest retracement that forms after it runs up a little bit in price, would you expect that to trade down into the same area that the low risk entry would be?
No.
Right. So to answer your question is they have to stair step up. The smart money reversal has to be the low. The curve starts on the buy side now. Then you have the lowest entry, and then the first stage accumulation will trade down into a PD array, fair value gap, inversion fair value gap, something to that effect, that's going to form higher than the low risk entry. Then once that first stage accumulation forms, when it rallies, the second stage reaccumulation cannot share the same space that the first stage accumulation took place. So it's just a stair step, higher and higher and higher. So it's all based on the scale in which where these things fall in line on the price action at the time you're looking at it. But they cannot share the same space. They have to be higher each time because it's building without drawing trend lines, without building support and resistance ideas. It's simply stair stepping higher and higher and higher, and it becomes an obvious mechanism to anticipate where this next price leg is going to form. In the second stage, accumulation or reaccumulation will be the biggest driver higher, and it doesn't spend that much time down there. The first stage accumulation can stay around a little bit, hang around a little bit, and maybe do another little whip into its first low, but not share the same space of low risk entry. The second stage reaccumulation is a one and done, out the door, goodbye, Elvis has left the building. How much it retraces is all pertinent to and salient to what is in the chart you're looking at at the time. They just simply can't share the same space.
Okay, thank you.
You're welcome.
Phenomenal. Absolutely wonderful. Follow up, another question. Market Oracle, you're up next. Then we're going to hear from Focus.
Hello, Kate. How are you doing? And hi, Michael. Am I
Yes,
audible
sir.
to
We can hear
everyone?
you loud and clear.
Thank you, Kate, for confirming. First of all, I would like to congratulate and relieve myself of this, like the thing ICT shared that he's doing better on the health basis. I am really glad to hear that and wish you a great health and prosperity for you and your family.
Well said, Market Oracle. Please continue.
So my question is related to the technical aspects of the market. Like there are market maker buy models and there are market maker sell model. Is there, I mean, I don't want to pry on this, but if you are comfortable sharing, are there any other market maker models which you are yet to make public, or are we going to see this in coming months, or you, through your books or your next mentorship series that is going to be in 2026 when you come back from holidays in February?
So the question is, are you going to build onto the market maker model in any other way, Michael?
I took it as I thought he was asking if I'm going to create another teaching series where I'm revealing other models or profiles and such. I don't anticipate doing that because, in my opinion, I wish I wouldn't have revealed as many, not because I'm trying to be selfish, but I think I gave too much too quick, and people being who we are in human nature, it's just we don't give it enough time to gel, to acclimate ourselves to it. I think the daily profiles, the weekly profiles, and the market maker profile buy and sell are ample. I do have other profiles, and some of them can be viewed, and I would readily admit they are very complex. They're very specific around conditions, and they're not as useful as a universal. That's why I taught in the private mentorship the universal nature of trading with these market maker buy and sell models. Like you just can pick whatever part you see forming next. Once you understand what they are and how they form in price action, if you can work through the time frames, top down, bottom up, whether way you want to go about it, if you can recognize where it's going to draw to, where are you at based on what price is done with the market maker buy or sell model, and then plug in play. There you go. This is what it's going to do. It's going to create a low risk entry because it's already done a run on liquidity. It's giving me the obvious inversion fair value gap. If there is no inversion fair value gap, then it's the first fair value gap that forms. And then that first retracing down into it, that's the low risk entry. That's simply model 2022. The application of the first stage accumulation, that's simply an optimal trade entry. It's an OTE, that's all it is. And the same thing for the second stage reaccumulation. It's another optimal trade entry. There's small little cookie cutters placed in there. So I don't believe that I should have any desire for another spin of different models, because I've given a plethora, a whole lifetime of just wonderful opportunities for anyone to go in there and just plug and play, plug it in. This is what I think is going to happen to us next. It's going to draw up to an old high, or it's going to draw down to an old low. And that's the draw. But as I taught yesterday, as a charter member, we talked about this, where the market maker buy model and sell model, they don't have to complete by going to the original consolidation. A market maker buy model can form in a bearish market, and not simply because there's relative equal highs doesn't mean it's going to go up here and clear that and fulfill a classic market maker buy model. It will go up 70.5, which is the sweet spot, and only complete that much of a retracement, leave those relative equal highs there. Why? Why would it do that? Because it's part of an underlyingly bearish market overall. So our expectations would be mooted to only expect 3/4 of the retracement, and that's our objective, not the original consolidation. So I think if you're honest, I think you'll agree that you have plenty, and you have a whole lifetime of looking for ways to use what you already have. You have a wonderful array of tools and applications to find whatever it is you want to carve out as an income. Sounds like a sales pitch for something.
Of course, Michael, I really
No, to your point, Michael, I mean, the model, we have upward models and downward models, right? I mean, ultimately the market is going up and it's going down. So we have upward models and downward models, and it's up to us to, again, if we're going to mitigate or eliminate being in a range or a compression, a balance, whatever you want to call it, an accumulation, then you either want to be formulating and simulating price upward models or downward models. There's really only two models that you've taught, really, and identifying the range, right? I mean,
yeah.
Yeah.
I mean, you're either looking for the rate on the liquidity, and that's the sell side of the market maker buy model. You're on the sell side of the curve, and that's pretty easy. They're pretty straight line and go down and hit the liquidity. But it takes confidence and experience to then anticipate that return back into that range to the degree of whether it's going to completely go all the way back to the original drop point, or what we consider the original consolidation of a market maker buy model, or if it's going to go like I taught yesterday, where it only goes to 70.5, which is the 3/4 of that range, and not needing to go any higher than that. So it matters not what the market's doing. You need to know where it's drawn to next. So if you understand where it's going to draw to next, then simply think in terms of that market maker buy or sell model. Where is those points of reference? The first accumulation, second stage of reaccumulation, the low risk entry, the smart money reversal, then going back into the sell side of the curve of a market maker buy model, going to the left side of it. Then you have the second stage distribution, first stage distribution, low risk entry, and then back to consolidation. Everything is backwards and forwards, whether you look at a market that's bullish or bearish. That schematic, that expectancy of price action, how it delivers, will allow you, if you really understand what it is that's been shown, you'll be able to trade any time frame, any market, and you'll know what it should be reaching for. And you can do it in smaller modular components, and you need not be able to have the whole move lowered and the whole move up, just small little pieces of it. And over time, you'll get better at it, and you'll be able to do the whole thing.
Sauce. We like to refer to that as sauce here at Trader Roundup, ladies and gentlemen. Focus has got his hand up next.
yes,
Market Oracle, I hope that answered your question. I'm pretty sure it did.
of course it did.
Of
Of
course
course
it
it did. And we really do have and we really do have a lot of things to trade upon and view the market and do our technical analysis on like where it is going to go. Michael has made it really clear. There is nothing left that we can ask from Michael. And
It was still a good
the
question.
one
I
thing,
like the question. I thought it was a good question. So, I mean, it's a good question.
It's been asked before by other charter members too, but I don't think that I need to do anything more. It's just going to create more. It'll create more dependency on me contributing more when I'm seeing a lot of people do very, very well. And I want to be able to take a step back and enjoy all this and watch more of you come up, because I've literally given more than it's necessary. And you can see it's happening all around the world. I mean, people are doing all kinds of crazy stuff with it now.
Yes, of course. And by building upon your Twitter space, I'm sorry, I still call it Twitter, from earlier, I have a personal experience to share to you. So every time, like I've been studying with you for the past 3 years, and my journey has been quite a bit wobbly up until now, up until a few months earlier. So I have been getting consistency with the results. I'm getting payouts. But the one thing that I have been really getting close to my heart, like whatever I do, I have to do this. And that thing is keeping my results private. So I'm not telling it to family. I'm not telling it to anyone on Twitter. I'm not posting what I'm getting, what I'm losing. Like, and that thing has helped me so much that keeping your results private is the best thing you can do. So people will not judge you for your losses. They will not appreciate for your winnings. This is a solo sport. There is no leaderboard. You are not competing with anyone. So I heard it from you, Michael, during the beginning stages of my evolution as a trader, and it has helped me a lot. And I wanted to share this so other people who are in this community can can feel me and see that they do not have to post their results or their payouts to the public.
Yeah, that's what I was kind of, when I tuned in, I was kind of hoping that I would have inspired individuals to tell the rest of the community that if they're comfortable doing it. And it's not something that you should feel obligated to do, but the ones that are very open and transparent, I wanted to hear them like you're doing here. You're conveying the importance and the comfort it brings when you don't hold this expectation over yourself, feeling you have to go out there and share everything you've been doing. Somehow everybody in social media feels like you have to show them your tax records, you got to show them what you buy on your credit card, where you shop, what political affiliation you're part with. Like, you're not entitled to that information, and you're talking about your financial well-being as an individual. You don't owe anybody any of that. But as a developing trader, here's the rub. Here's where the rubber meets the road. I promise you, trading will become far much more pleasurable. You will enjoy it. It'll be far less stressful. And you will learn better when you stop holding this over your head that you have to prove to other people that you can trade, that you have to prove that you've learned to be profitable by now, or that you are profitable. And when you stop doing that stuff, when you take a loss, and it's going to happen, when these things happen, you're going to feel much more comfortable saying, you know what, I took a loss. It's better if I just go do something else today. Because you're not going to feel that impulsiveness to be, I got to correct it in the witnesses of the internet. I don't have to bring myself before the courts of social media and plead my innocence for being human. I don't have to do that because I'm the only one that watched me do this today. So therefore, I'm forgiven. I've already forgiven myself. I already know I'm imperfect. So therefore, I don't owe anybody an obligation of any kind that I have to present the evidence that I can still trade profitably because you've cut outside influence out. You won't feel that impulse. So it's very liberating. It's absolutely 100% self-control, and it's the peak form of responsibility. Like, the only reason why we as humans want to share what we've done is because we need the validation it brings. And if you're trading with that context around you, and you place that stigma over you as a scorecard, you have complicated trading to a degree that you can't even imagine until you purge it from your existence as a trader, completely cut it out. How many times have you heard Warren Buffett come out and say, this is how many times I've lost investments in the last 12 months? Right. Nobody has an answer for that.
Nope.
Right. Yeah. He's not in the business of sharing what he's doing. He's not in the business of that. Every market wizard in volume 1 and 2, because they're the only ones, in my opinion, that matter, How many times did they ever come forward and talk about how many times? They had to write a book and be interviewed before they started talking about it. But all of us, somehow, we all have to be raised to this level of we have to be accountable to social media. We have to be accountable for it. Because if we don't do that, we couldn't possibly know how to trade. We have to prove it to social media. We have to take it to the Supreme Court of Twitter. Get out of here. You don't need to do that. You're going to be so much better as a trader when you make it private, because that's your personal finances. And when you're not allowing anybody else to run your company, because that's exactly what you're doing, you are letting people that are not even on the board have a say-so in what you're doing, conducting your business. Does any corporation run their business like that? Hell no, they don't do that. But you're thinking because these assholes online are talking from their ass, they're literally trying to convince you to jump through hoops for their entertainment. And then when you show the receipts and you're making more than they're fucking ever going to make in their lifetime, they deny it. They're never going to believe you anyway. So what does it matter? You're putting all this additional pressure on yourself for no fucking reason. No reason at all, except to please these asshats. So starve them. Starve them. Let them fucking choke on their misery, because if they want to sit on the sidelines and play with their fucking dick and do nothing beyond that and not learn how to do this correctly, leave them in that shit. Let them stay there, because you owe them nothing. You owe them not a fucking thing. Your success, guess who that is? It's yours. It's not theirs. Why the fuck do you let them, don't entertain them with your shit. Your money is your fucking money. You don't owe them a fucking excuse for nothing. You don't owe them a fucking explanation. You don't owe them a fucking statement. You don't owe them a broker fucking statement. You don't have to tell them what broker you're fucking trading through. You don't have to tell them how many fucking losses you've taken. Fuck them. Let them come forward and prove they fucking make money, because they are talking out their ass. They want to see everybody else entertain them and prove, but they ain't done shit. Who the fuck are you? Who are you to ask any of us what the fuck we're doing? Who are you? Mr. fucking, I just started my account yesterday fucking day. 2 fucking people following. The fuck out of here. Who are you? You're nobody. You need to drop all this dead weight. Kill all that shit. We're getting ready to go into a new year, man. We're getting ready to go into a new year. You're going to keep doing this stupid shit still next year? You're going to keep doing this dumb shit, appeasing people on the fucking internet that are nobody. You give a shit about what they think? Do you fucking care? Ask Lanto how he gives a fuck. Who the fuck cares? Who the fuck cares whether he's made that money doing my stuff, anybody else's stuff? Who gives a shit? That motherfucker's making bank. He's making fucking money. And ain't nobody on the fucking internet can say otherwise. They can't do shit. You ain't gonna hear me say shit. He could have came out and said, fuck you, ICT. I did this with market profile. Well done, motherfucker. Here you go. Well, that's some fucking money right there. That's real money. That's shit talking money. He's got his fucking clout. And guess what he's doing? Just walking. Just fucking walking. He could be rubbing it in all your fucking faces, parading around, peacocking, all kinds of shit. What's he doing? He's just walking it the fuck out. He's handling his fucking business. He doesn't give a fuck whether people believe him or not. You think he gives a shit? When he looks at that fucking bank deposit, do you honestly fucking think that he's worrying about who the fuck believes that that money didn't just go in his bank? You think he gives a fuck? You wouldn't give a fuck. So stop. Stop worrying about pleasing other people. Stop looking for validation from me. You don't need it from me. If you're making money, that's your fucking validation. That's it. You have passed. You made fucking money. You did it by yourself. You followed the logic. You don't need me to, can you approve of this? Motherfucker, you making money. You are making money. You are feeding yourself. You're feeding your family. You're putting bread on the fucking table. And you're doing it with a skill set that you worked for. Why? Why are you all stressing about what other people fucking think? Fuck these people. None of these people asking for it deserve it, number one. If they had class, if they had truth, they wouldn't even fucking ask for it. They wouldn't even ask for it. They're the same thing as these drug addict motherfuckers that sit on the corner of the fucking road that are pretending they're fucking homeless. They're sitting in a welfare Section 8 fucking housing, getting fucking rent for free, panhandling, making $1,000 a day, and buying, shooting up fucking drugs and going doing the same shit. You're feeding these addicts. You're feeding these motherfuckers. They want to see you dancing around. Fuck them. This is your company. This is your fucking money. This is your legacy. This is your fucking lifestyle and career you're creating. You're not out here trying to, when you started trading, when you started to learn how to trade, you didn't say this is part of the reason why I'm doing it. I want to tickle the fucking ass of everybody on X. They're all going to fucking love me. Man, it's going to be a great circle jerk. Fuck this bullshit. I can't do nothing but please everybody else. I don't care how much money I make. I want everybody to love me because I can bring receipts. I make this much money and this is how many times I lost and tell me how well I did. Fuck you. There's your answer.
This is what we missed in today's space. I loved it, Michael. I loved it. This is so
You had the dad, Michael. Now you get the brother, Michael. You get the bro coming in here and telling you.
I love both Michaels here.
Oh, I love it. Let's.
Wait,
I
this is
know. Michael
so
is
good.
taking some deep breaths right now, and we got a lot of hands up. And Market Oracle, thank you for chiming in, for being here. We got. I mean, I want to hear from Mauricio, but we got Focus with his hands up. We got Alfred with his hands up. We got Hunting the Wick with his hands up, and it's pretty much a mic drop moment. That was as real as it gets. So we'll go Focused, Alfred, Mauricio, and Hunting Ticks.
Yeah. Wow, that's, man, 100%, man. Follow, just tune out the distortion. 100%, he's on point with that. I pulled out my journal. I've got some thesis questions that I've come to over the past 5 years, and I wanted to kind of just touch on a couple and see if I'm on to something or if I'm looking at something correctly. Okay, so every time I'm looking at these fractals, right, it's applying across all time frames. So I, from my own guidance, start on a 12-month because it's an open, high, low, and close situation. And that data enables me to be able to look forward, because I understand where the liquidity is, what was the relationship to the previous candle or the previous 3 candles because of how the imbalances and expansions are created. So I'm always looking through that lens fractally. And I break it down, and I'm constantly seeing these AMD cycles across these, like a 5-year time to a 1 year, and then how I can gauge the manipulation to be able to decipher how far the expansion will occur. And I resorted over to, like, if you pull an arrow back, determines how far it can fly based on its trajectory. So kind of adding that with these cycles, and everything is an MMXM cycle, like everything, right? When, like you were talking about, since I'm always looking at these specific fractals, right? That high that purges liquidity or maybe takes previous year's high, when the imbalance is created after that first displacement, the first fair value gap that appears after the change in the state of delivery, that can be utilized as the inversion because job's done. And now fractally we'll start rolling over, whether you're applying that on like a 1 hour soup situation or a weekly soup situation or daily, like whatever the fractal may be. So and you constantly are using this phrase of stair stepping. And I have some questions, so I'm just kind of trying to lay some groundwork. So when I'm looking across these fractals, for instance, like on a yearly time frame, and like how this previous year was going to expand, taking the low of the previous year on a monthly, there was an order block at 50%, and that was in April. So then we're coming out of first quarter, right? And like as we had talked about in our first conversation, like that was that week of the accumulation, which was an inside bar. So I'm always seeing this run on liquidity and then an inside bar. I'm like, that's interesting. Whether I'm looking at it on a 30-second time frame or I'm looking at it on a monthly time frame, I'm seeing that same fractal delivery holding true. And a daily inside bar is always, for me, very powerful because that's accumulation, and expansion comes after that. So I'm seeing these fractals develop and can anticipate based off of the building of that fractal from the 12-month to the 6-month to see, okay, what's this quarter likely to do into the months. And each month I'm grading, looking at what is the low of the previous month, the high, and the 25 and 50%. And I'll notice those levels continuously get used in the upcoming month because it's the value, right? Anything above that is expensive. Previous month's 50% is kind of like an EQ, which is a profile of where that seek and destroy happens, right? The accumulation of those orders, I call it the razzle dazzle, and then run one side, changing the state of delivery. Now buy side of the curve is engaged, and you can start utilizing that entry fractal model of that first imbalance, or if it's a breaker, like you say, if you don't utilize that inversion, wait for the breaker, then you can utilize the breaker, or you start using the imbalances as they're occurring in that buy side of the curve because you're using the order blocks and the imbalances now to run for that new liquidity. The stair stepping as it's moving from those fractal deliveries, and I've been noticing it based off of time first off, right? So I'm looking across the horizon like I would on an hour, knowing that at the end of the hour, there's the macro, right? So if I'm looking at that across the same fractal delivery that I'm applying to like a monthly, I'm seeing like a monthly macro or a time or a date when the spooling, or as we say in the macro, is a set of instructions that are to occur, which is it should run for liquidity or it should run for inefficiency. So I'm seeing that fractal holding true on those higher time frames by applying, well, that's a macro is occurring at 83% of the hour. So if I go and I take a GAN box and start applying that across different fractal time frames, I'm seeing that to hold true. And I can see the previous month was an inside bar. Then it starts to, all these little pieces start to connect back together. And the language and the description of how that phenomenon happens, like, you know, I've internalized that to where it's not like I'm learning a fair value gap because ICT taught a fair value gap. It's like, no, it's describing that narrative action that's occurring in the fair value gap, which is the language that you are picking up to try to give that narrative life. So you can say, this is the thing that's happening, because specifically you can't say this is what's happening because of, for whatever reason. So you have that language that you're trying to transfer to us. And I'm seeing this same fractal, whether it's in an EKG meter or clouds, or charting like scientific models of solar flares or ice ages across the years and the carbon in the atmosphere. Like I'm seeing the market maker model on everything. Like it's not like it's anything different, it's anything that's changed. And that's what initially sparked the idea, well, maybe I can fractalize that too if I go from the higher time frame down or up. And so now I was able to this year, through my anticipatory skill set, understand where the low of the year should happen based off of the yearly fractal, and then projecting if they manipulate it down, how far could the arrow fly, which is what we were able to hit coming into the yearly macro of October 30th, and now starting to get this distribution to the downside. So like, am I onto something, or am I stretching something and beating the candles into making them, as you say, submit to my what I'm seeing?
Well, I can't state emphatically that I was able to follow everything you said. It was a lot, but I heard enough to know that what you're doing is outside the scope of what I do. So if you're finding any fruit from that, you're finding on your own work. So, if you have discoveries and it holds up over time, you might have something that's entirely isolated from me, because it doesn't sound like anything that I apply personally.
Okay. So like the first presentation, right? Like of those time cycles and how they can help determine, like if you were looking at it through schematic, like what schematic would print, where's the buy side, the sell side, maybe based off previous sessions, right? So that's kind of determining or giving us a deterministic idea of like what's the model that could occur, right? Say you're looking for downside delivery in bearish days, right? So you're looking for, say, like only 25% of the previous daily candle to be traded to, for the market maker model to continue to the downside. Right. So like whenever I'm in the first presentation type of idea and stripping it from that time model, like you were giving us those opening range times, and then looking at it through like a monthly perspective or the weekly perspective, the first imbalance that's created on the week. How is that utilized in the creation of that same schematic that I'm finding on a 1 hour candle, looking at it through a 30-second time frame? And seeing those same relationships that kind of still hold true because of the market dynamics and the creation of those impulses, and then the breaking of structure that then creates all the different PD arrays that we can start to utilize, and how price stair steps from like the big figure down to the 20s and the 80s, down to the low at the, the other big figure, to then start to get the market maker buy side of the curve that starts to occur, and then how those certain type of soups, low risk buy, and then I call the lazy interbank trader, but that last movement before it starts to get above premium of that implied dealing range, uses that stair step, and with time, like they both align. So like just taking that same idea and transitioning it over, because you said at one time, and I kind of ran with it, there's nothing new under the sun, that these fractals continuously repeat. So if I could see it on the 1 hour, because that's what I took as a personal mission. If you trade the 4 hour and the 1 hour as a daily chart, a whole new world opens up to you. So I like, well, if it applies that way fractally, what if I take the monthly chart and apply the same concept as I would on a 30-second chart under a 1 hour candle viewpoint, but doing it from a 1 month and a daily viewpoint? And I started finding a lot of the same truisms that existed.
Yeah, now we're talking my
Okay.
stuff. But when you started talking about GAN and putting a GAN box or
Oh,
something like that, that we just left the conversation. I don't know what you're talking about.
no, sir.
I'm not trying
Just
to be funny or anything. That's just simply when other people's work gets placed into my stuff, I'm not going to be able to speak as purely as possible with my
sure,
own work because I don't want to defend things I already shunned myself.
sure.
And I don't know what work you're doing either. So I don't want to try to sound like I'm invalidating your discoveries, because you could very well be discovering something that's new, fresh, and who knows? Who knows that it may be equivalent or even better than my stuff. I can't say or argue that case because I'm in a position of ignorance. I don't know what you're doing. But I got a little alarmed when you mentioned GAN because we don't do that around here.
No, sir. It's a tool. Like I'm not using it anything. Like I just be able to see delineations in time. Like if I turn off everything, but it just shows me, okay, from here to here, where's 50% of that time, or where is 75% of that time? Like that's the only thing I'm using it for, is just to be able to gauge like time. But everything I do is based off of everything you've ever taught. Like that's all I trade through is that market maker model. So it was just a tool, like a fib. It's just a tool that, like you say, and when you're reading gauge, it's not the numbers itself are giving you areas of gauge that you're already looking for things to occur because
Right.
the market maker models. That's not, so it's just the tool that I was using, but I'm just the truisms that I'm finding across these higher time frames, and how you were presenting these time-based models utilizing, like how I said in the first conversation, how I would really seatbelt myself or strap myself to that first presentation, because I know it's giving me insight into something. And if I can look back and see, well, where was the liquidity? What happened? What are we looking for? Is the weekly expansion, where we at in the week, like what, where we at in these time cycles, so to speak. But I can anticipate that, and I was just finding a lot of these truisms that are holding across a lot of these different time frames, that is very interesting, because I'm seeing that across, like I said, like market maker models, when I'm looking at EKGs, or when I'm
So,
looking at
so,
ICT.
so focused. I hope you don't mind. I just want to interject here. What I heard him saying, I don't know if there's any point or elaboration to this, but are there higher time frame macros that you were referencing? Focus, like you said, a yearly macro. What's that?
Well, so like I was saying, if I just carried that again, just technical studies, right? Like I don't know anything, but I'm willing to investigate it all. And so I said, well, if there's something that I'm finding is a truism that's occurring on this 1 hour chart, and if I just as a tool take something that can allow me to be able to gauge that. So I was like, well, what tool could I use? And I found that if I took the GAN box and I just used that time aspect, I could say, okay, well, what is that gauged over? And it's about 83%. So I said, well, if I take that over to a month and I apply that on the month from the start to the end, it should show me by, a truism, so to speak, like that's the macro of the month. Right. And so the same thing if I took it for the year and I grabbed it and carried across the year, what would show up there, right? And that was the macro for the year. That was like, so that was this year, what we just came into.
Is that a thing? Is that a thing, Michael?
I
I've
didn't,
never heard of that. I'm just
Yeah,
curious.
I'm not someone that does that. I don't have any affiliation in any of that stuff that he's talking about. I understand that there's this pursuit to try to find things and call them macros, and the only macro exists is the 50-10. And if there's any other things that you're finding in price action that seem to repeat, I'm not ever going to subscribe to that. I'm not going to say, yeah, I'm not going to validate it. I'm not going to try to talk down against it. I understand what you're doing as independent thinkers. You're trying to formulate new ideas, and it sounds cool to call it the macro, and but it kind of confuses the community. I get a lot of emails from people that they'll ask, is there a macro at this many minutes after the hour, or this many minutes, before the hour, and what about this and what about that? And I just want to have this opportunity to be upfront and cordial enough still to say that there is no other macro except for the first 10 minutes to the top of the hour and the 10 minutes past the top of the hour. If you're seeing any kind of price runs that are, I guess, in any way or scope in your own repertoire, in your own tools, that's something other than a macro. You're welcome to call it whatever you want to call it, but when you're amongst all of us as the same community, kind of like a hive mentality, we're trying to have the same language. And it's like someone coming in and saying, we all learned how to speak English, and an influx of new ideas come by way of now French, okay? And we're all trying to interpret, what is being conveyed here? What are we getting at? And I'm trying to be the good person and not try to be mean about it, but there is no other macro. That's it. It's 50-10. That's it. So if you're seeing impulses in price action that you can time or learn to anticipate, just try to avoid calling it the macro, because you'll avoid a lot of confusion. There's a growing tension in the community where they want me to be like a gladiator and smashing everything like I do with other people's interpretations of price action. And I'm trying to be mindful that I don't want to kill the spirit of curiosity. I don't want to kill the desire to look deeper. And I certainly don't want you to be limited just to what I teach. Broaden your understandings, and by learning everybody else's stuff, being familiar with it, you'll be better at what you're learning from me. You'll see their weaknesses. You'll see that. But there's this pursuit of finding something and being the author of something. Or I created this and I created that. I was reading on Twitter, there's a guy saying that, you didn't invent the inversion fair value gap. I invented the inversion fair value gap. Now here I am sitting on the outside as the author of it. And I'm thinking to myself, now younger me would take this opportunity to come out here and act like an asshole, but I'm just going to leave it alone. This is just for the sake of the community. I don't want to have all this infighting. But the point is, if you're discovering something that you're seeing a measurable response in price that you can learn to anticipate, and you're seeing fruits of that, I think you're probably onto something. I don't understand exactly what it is you're seeing personally. I don't know what that is, but I would never want to squash your interest or try to dissuade you from looking at something that might be valid. There may be something there that I'm not aware of. Does that make sense? That you understand? Like I'm trying to be balanced about preserving your inquisitiveness about pursuing your own discoveries, but I'm just asking the community, when they have these little quirky things that they find, try not to use the same labels I've given my stuff, because it causes a great deal of, if I pan through my comment section, there's all of these individuals that will say, I was watching so-and-so this, and I was listening to so-and-so that, and I read this from so-and-so, and I was on Reddit, and they said this and that and other thing. And there's this, for the last year, there's just been growing conversation about macros. Is this a macro? Is that a macro? There is only one. It's simply the 50-10, okay? Now, In that last hour of trading, the final hour, you have 4 of them in there. There's 4. Apart from them, that's it. There's no scripts. There's no algorithmic runs in price action. It's just go, 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 baby. And if you know where you're at in terms of the market maker models, you can anticipate them. What you're describing on these higher time frame charts, I can't answer for personally. So if you're asking if there's any validation that can come from me from that, first of all, don't ask for validation from me. If you get data that supports your findings, it doesn't matter what I say. If you can systematically and statistically prove that there's an edge that's forming around the things you're finding, don't ask for other people. Don't ask the input for other people, least of which mine, because I'm going to be biased. I'm going to say, if it's not my stuff, I'm not interested. And I don't mean to be rude when I say that, but I'm not trying to say to you, don't waste your time, because I don't know what you're doing and you may be onto something. Is that fair?
Focus.
Yeah, sorry, my phone. No, 100%. I didn't mean to collude because I run into that too. People throwing words around because they think they understand the meaning. Like the macro is only that time, 100%. I just was finding that truism and finding it across other arenas, time frame, fractals. Because if you remove the time frame and you're just looking at it, like whether it's a 30-second or a day, like that phenomenon, seeing that and how, if I'm gauging, say, a break or leg, and I pull down my manipulation, then anticipation of like 2 and 4 deviations of that, like that fractally applied across, different situations on previous months and stuff like that, like seeing those things and occurring. Because like I said, all I utilize is what you teach. I've turned out as trading for 10 years, 7 of it has been nothing but yours, because I found it's the only thing that I could truly trust because it worked. And so in my own search, I think it's just been because of my own insecurities that I bring to the market. I want to be perfect, and that I want to find that thing that allows me that I know, I think it's just my own insecurity, because I don't like that uncertainty of what if, because ultimately I feel like I'll fail, I'll fuck it up. So like, there's always this strive to like, I got to figure it out or something. So, I appreciate your fatherly advice, and I certainly don't want to collude the community with false verbiage, but I was just finding that truism across different time frames, and was and again, it may just be my search for that security that I feel as a character flaw, but I appreciate you answering my questions.
Don't put down that inquisitive nature. Keep that.
Yes, sir.
Because if I would have put down my own, I never would have got to where I understand all this stuff. I would have resisted it. So there's a balance that has to be maintained by you. You said you're looking for perfection, and that's a goal. That is a goal. Everybody should strive for perfection. Be perfect. Will we ever reach that? No. But it's a work in progress. And if you're trying to aim for that, would someone that's trying to be perfect, principally oriented in what they're trying to do, could they be grossly, misguided by doing that? No way. Because if you're trying to be perfect, guess what you're doing? You're managing risk impeccably. You're trying not to overtrade. You're trying to be very systematic about what it is you're looking for. And you're looking for the strong why. Why are you doing it, and why should it do it? And if you think that way about everything you're doing as a speculator, as a person in general, and everything, you're going to be usually most of the time on the right side of history. So I don't want to crush that, and please don't take what I said as a reason to say, well, I'm just going to abandon it all, because don't do that. You might find something that will help you in your understanding about everything as a trader. Most of my best discoveries came for trying to really make something better or look beyond something that already was working, and that didn't get improved on, but it brought a better understanding about another facet I was weak in, and I didn't even spend any time noticing that I was that weak in it. So you're always going to learn, you're always going to get better at your own craft. That's honing the edge. That's you improving. So please don't take what I said here as as a means of discouraging you from doing it. Just be mindful about how you use the language.
Yes, sir. And I didn't take it that way at all. It just came,
Good.
it
I
came
appreciate
across
that.
fatherly guidance and sincerity. So I thank you for your, allowing me to ask those questions, because it roots back to me what's been working and continue to explore, but what's been working. And like you had said before, you learned something, you had something that worked in your hands, and then you started to mess around with it, make it better, and it only caused you more pain. And that's
Hmm.
I guess kind of what I'm striving in an experience, to where I just need to slow myself down, take in the data, discover what I discover, but realize the goal is that financial freedom and the wealth for my family and my personal growth in that adventure. But thank
Sounds good.
you.
I love it. We're going to hear from Alfred coming up. Mauricio, I know, has got his hand up. Going to hear from Alfred. Mauricio, then Alfred. Just real quick. Throw it in here, Mauricio. You there, buddy? Mauricio? We can't hear you, bro. We'll come back to Mauricio. He dropped off. He knows he's going to come back on. That's okay. We'll pop over to Alfred real quick.
Yo, kid. Long time.
What's going on, buddy?
I missed you so much, man. Let me just get straight into it, man. I don't have any questions for ICT. I just wanted to touch on one thing that he said that really resonated with me as a developing executor. And he's like, he's working on building an account and his goal is to like make 10 grand. And he's like $200 away and it's a Friday. And he knows he can do this again next week. He knows he can make money, but there's this impulsive urge that you just got to do it today. And that's a very real struggle. Even though mine was not the same amount, it was a similar feeling where you're so close to getting a withdrawal and you end up doing more than you should, and then you end up losing everything. And on that weekend, you're spending time, because I'm an entrepreneur, so I buy and sell stuff. I went into real estate, and I'm brainstorming ways in which I could panel money in order to finance an account again, just so that I can repeat the process. And I've always wondered, what was that one thing I struggled with? That one thing, that impulsive urge to just do something. And he said it himself, like, you have to journal. And these are things that you will never say to anyone. On Jesus Christ, there's this fear that someone might find my journal, and if they read that, whether it's a loved one, whether it's a friend, whether it's someone I really care about, if they read that, they would hate me to death. Not because I mean those things, but those are just the thoughts I had, growing up and developing. These are the things. And one of the ones that I would really love to share with you was, there was a time in my development, not even in my, just in my personal life, where I really resented the people around me. And the one person who was really closest to me at that time was my mom. And she was the only one who could take care of me, etc. But I hated her, and then I told her this. Of course, I had a conversation with her, but everything I did was to get away from that house, whether it was make money, whether it was a small business, whatever it is, just get out of that freaking place, because I hated where I was. I hated everything about that situation, and my goal was to get out of it. And I realized that in trading, that impulsive urge to want to get out of a situation is not what gets you out. You just have to slow down and take it slow, one step at a time. And when you learn to accept these losses and you learn to find yourself, you still find that at times where you're close to a breakthrough, or you've made a breakthrough, you've made a big win, you just triple down and you lose everything, and you have to start that process. And when I sat down with myself, I realized, the hate I have for where I am is what's stopping me. Because every time I get so close to leaving, I fuck it all up just to start again. And there was a time where I couldn't have that anymore. And I stopped speaking to my parents. I stopped speaking to my nieces, my friends, and I just shut everyone out. And I said, it's okay. If you guys hate me for that, it's fine, but I can't live with you like this. And I think for a month or two, my mom gives me a call and she's like, Alfred, we're having a normal conversation. We don't usually have conversations. And my mom tells me, One of my greatest fear with you, Alfred, is that you will leave me the same way your dad did. And I don't want to see that. I don't want to see my son leave me. Mind you, everything I do in trading, investing is to get out of that fucking house, leave her. So my dream, my goal and aspiration is to leave someone that's so afraid of losing me, that's using tactics like she's not manipulating, she loves me. She's my mom.
That's
Love.
deep. That's deep.
And 100%. And she loves me. And I don't see that. So everything she's doing, she's trying to protect me, you know, a proud African mom. She's trying to take care of me. And I don't see that. And after that phone call, like literally when she dropped the call, I sat down and cried. I was in the middle of the street and I just cried. And I'm like, fuck, man, I've been going about this the wrong way. And from that day on, I've never felt on tilt. I've felt the impulsive urge to, you know, where you put more than trade than usual, where instead of placing 2, you place 3. That's what, I can deal with those. But once I discovered that about me, where I hated someone so much, like, and that hate is real. You know, when you want to get out of a situation, whether it's a job, whether it's a friend, whatever it is, you don't want to be around that person because they drain your energy, and you don't understand them, and you feel like they don't understand you, and you're trying to run away from something that will always be with you no matter where you go. And as I developed as an executor, as I grew better, I
Alfred,
learned.
how have you combated with that? Just curious. I mean, I think that's a very real, being drained by someone that you love and have it somehow adversely affect your trading. How have you managed that?
The best way obviously started with my mom. I had to understand that she's coming from a place of good intention, but there's a saying that the road to hell is paved with good intentions, meaning even though she's trying to come from a place of love, her tactics are flawed. So you need to accept that everything she does comes from a place of, I care about you, Alfred. But then I just don't know how to tell you that. I don't know how to express that. I don't know how to show you in a way that makes you feel like you're cared about. And when you realize this, it's much easier for you to let go of the things that she can't do. Like my mom, she 21 years old. That's the day my mom said, I love you, Alfred, when I was 21. I remember those words because I've always wanted to hear it from them. I always hear other mothers telling their kids, I love you, dropping them at school. Those words never came out of my mom's mouth till I was 21. And it was after that phone call because I understood her. I became more patient with her. I started to initiate more. What are the things that maybe she wanted from me as a son that, let's say, a text message in the morning. Good morning, mom. I missed you. So on the simple things. And when I started doing the little things, just like I do in trading, I went from high for freaking holding for 7 weeks to I'm on a 15-second chart, baby. And the small things that you do, those really matter. Just a text message here, send her. My mom is not a money person, so she didn't give 2 fucks when I made my first 10 grand. She didn't care, you know. She didn't give 2 F's. She's just blessed that I can have more. And whenever I gave her, she was always like, Alfred, I pray to God you have more. When I gave my friends, they'll always just say thank you and they'll use me. But when you give it to people you love and you really start to build them and you accept them for who they are, flawed, she never motivated me. So I never needed her motivation. She never inspired me in any shape, way, or form to become someone better. But she inspired me by the way she showed that she cared. And in her whole unique way, even though it's not productive in any shape or form, you need to understand that she's coming from a very, very good place. And you need to not seek validation from her. Because secretly, I want to hear that from my mom. I want my mom to say, I'm proud of you, Alfie. And she said that obviously when I moved out and started paying her rent and shit. She's like, oh, Alfie, I'm so proud of how far you've come. But all those things came when I accepted her. And everything she did leading up to that time was not as bad as I interpreted it. It was misinterpretation.
Okay.
And
So you really kind of grew out of that then.
I really grew out of it. But when it comes to friendships, like people you don't fuck with, just cut them off, man. It's 2025. You don't need to be about that. But when it's people you really love, like your family, people that you care about and you know are sincere. You know, my mom is not toxic. She's not like those, you fail, Alfred, you're never gonna make it. She's just, I'm afraid that the world will consume you and I won't be
Yeah.
there to protect you. That's a mother's love.
No,
That's a
that
mother.
is a mother's love. You're right. You're
You know,
right.
the dad, dad wants to protect you, but they could be protecting you the wrong way. You know, they could be holding you too tight till they break your wings and you can't fly anymore. And I told my mom, I can't have that. I love you, but keep your distance. I'll pay your rent, I'll cover you, I'll come visit, but I can't be around you for a sustained period of time because overall you're negative in your thinking. But by me telling her that and showing her that I'm growing, that made her grow as well as a mom. She self-reflected
That's
by
good. I
watching
like
me.
that. I like that.
And even when you have,
So Alfred, Alfred, I love you. This is great. I've
you
got a
know,
lot of people here, and we're running out of time. I love you.
kid, love you,
Don't
man.
mean to interrupt.
No.
I'm just trying to hold this fiduciary responsibility of mine with the audience. Okay. So I love you, Alfred. Thank you for expounding upon that. It's very deep, actually, very deep, and added to the conversation. So thank you. Keeping it going.
Kid, do you hear me?
Mauricio. Yes, sir. Mauricio.
Finally.
I know you've been excited to jump up, brother. So
Thank you.
come on up.
Thank you. Thank you.
Yes.
Finally, I figured this out. Okay, Michael, just to keep in with the rules, straight to my question. I know that most of the community focuses on intraday PA, but my question is more about higher time frame structure as we head into the close of the year of this yearly candle and the final 29 trading days of the year, excluding holidays, obviously. The last 2 days sessions have been unreal. The regions have been extreme, and I would like your thoughts specifically on NQ and ES going into the next week. More precisely on the fact that ES is showing a bullish SMT relatively to NQ. Two, we're currently trading inside of a weekly BC. Price has weak outside of it, but the candles bodies continue to hold within it. That said, this past week closed below the consequent encroachment. And the most recent daily BC has now been fully closed and converted into inverse fair value gap, a daily inverse fair value gap, which aligns closely with the levels of the new CIBI. Given all of this, and strictly from a swing trade perspective, how will you be looking to position into year end? Thank you.
First, my trading is complete. I'm not doing anything else. I'm getting ready to go into holiday mode. The expectation I would have going into the rest of the year is anything can happen. Anything can happen going into the end of the year because we have the U.S. potentially making a military move in Venezuela. We have the ongoing stuff in Ukraine, whether we're going to send troops over there or not, whether we're going to do this. There's so many things going on that already pop off. The whole thing with the Epstein list is building up. And some of you probably be like, oh, what's this got to do with anything? It has everything to do with everything. And I'm of the opinion, I'm just going to say this and I'm going to go back to listening. The idea is the people want to know who's on that list. They want to know if our president had any role in that. First, he says, we got to find out what's going on, what's not going on. Now we're going to point fingers at Bill Clinton. And now we're going to point fingers at this one over here. Well, I thought there was a nothing burger. The fact that the half of the government is pushing, and if you did a poll, honestly, on the United States citizens, I mean, think about it. Don't you want to know? Don't you personally want to know who was doing those types of things? So that way we could identify them and shun them and maybe even go so far as to prosecute them. I would. It's just human nature. I mean, if those things really did take place and Prince Andrew paid out $3 million for something that never took place, we have a problem. There's a conflict there. So I'm personally expecting some huge black swan event, something enormous that's going to come out of the left field, and that's going to have an impact on the market. I like the fact that there was an SMT divergence at the highs with ES saying, no, I'm not interested in what the Dow did. I'm not interested in that. Now, if it would have been something that's bullish and the Dow was causing the SMT divergence that showed a divergence bullishly for Dow, but not showing it with the ES, then I might have a little bit more consideration to it. But I have very little consideration for the Dow. So as it relates to NASDAQ, I'm of the opinion, unless a swan event, that means something unexpected, some kind of a geopolitical upheaval, some kind of a disruption, some kind of attack, some engagement of war, some kind of really big just wow, it really it's going to suck the news feeds right into that, and that's everybody's focus for right now. I think that's what's going to happen because there's so much emphasis being placed on they got to perform and bring forward the evidence of who's on that list, who's not on that list, and is our president on that list. You know, they're all part of the same club as far as I'm concerned. But the point is, I don't see us making higher highs on the year, personally, unless something drives it from a swan event. What do I mean by that? It can create a dramatic run up, clear the high that people are now establishing shorts on, run those out, and then start a decline going into 2006. I'm not bullish 2006. I'm not holding any bullishness to it. I think there's a heavy degree of distribution that's been taking place. You have the biggest investor in the world, Buffett. He's holding the largest cash position he's ever had, ever. And this man's always been invested, and he's liquidated majority of everything. He owns nothing in the banking sector anymore. That should concern you. So my thoughts are that we have probably, unless it's going to be used with a geopolitical event, we probably made the high of the year. And worst case scenario, we range from whatever's high has been formed, and we make slightly lower lows if nothing takes place, or if something really bad happens. And I could care less, frankly. I mean, you're gonna hear water running. I've got to wash my hands. I'm sorry, but the market, to me, I'm satisfied. I'm not needing to make anything else the rest of the year, and I'm moving to the holidays. But I personally, right now, am content with what the high has formed. We can consolidate going into the rest of the year and not take another higher high. But if we have some kind of, like for instance, let's say we start moving in troops on the ground, Venezuela. Well, what does Venezuela have? They have oil and they have natural resources that we really want. We want to be able to stop China from having access to all that stuff. So we know that there's China building up all kinds of relationships and whatnot with Venezuela. They've put this Maduro guy in there, and all this stuff supports our real reasons why we're doing it. It's not for drugs. Look, the United States is the biggest drug dealer in the world, okay? So they're not trying to save anybody there. They're going down there to cut off the access and the positioning that China has, because they're literally in our backyard right now. So the ramifications is, when everybody's looking at these charts, they're not thinking about stuff like this. I'm thinking about stuff like this. I'm weighing the effects, the cause and effects of, do we put boots on the ground, because that would act just like another Vietnam. I think we could get caught up in all kinds of just bogged down in some garbage, and they could use this to really put a meat grinder together and instill another draft. And I'm going to tell you right now, fuck you, my kids ain't going nowhere. Last time I saw them, they took a fucking global trip on a cruise, and I don't know where they're at now. So I'm personally saying we're done for the year, unless some kind of black swan event comes in. They use that to push price up, clear the shorts, and then we start working lower. I'm not bullish anymore. Let's put it that way.
Michael, as a swing trader, will you? I understand that you're fully out, but just for the perspective of the swing, you teach us that we don't pick tops and we don't pick bottoms. In terms of this part of where we are, and obviously globally how everything is messed up, we still haven't done a daily CSID. We're close to do it, but we still haven't done it. Will that something that, will you give weight to the more to the bearish thesis once we do it?
Try that one more time so I can follow you. I'm not sure I understood what you were asking me.
My question is on the I believe that we don't have a daily CSID yet.
Okay, changing the state of delivery.
Correct.
Okay.
Is that something that you will give more weight towards the bearish bias, just in terms of forgetting about what's going on globally and what is happening, just looking at the charts and ICT concepts related? Is that something that that's where you will say, or where I should say, listen, this is definitely bearish?
I think instead of thinking that way, I think expect big gaps, big where we stop trading the previous week and where we start trading. Like we just saw it when that was big sell off a couple Fridays back, and we created that big smash down, and then we opened up huge on the next new week. That gap, that enormous gap, I think we could potentially see things like that on the regular going into the rest of the year because of all the uncertainty. I'm personally, this is the blanket statement that I can say, and this is my sentiment. If I was on TV and they were asking me, what is your perspective right now? I see heavy de-risking. That means all of longs are being liquidated by smart money. That's what I see. We have been going up since the 90s. This thing has been a bullet train just going up and up and up and up and up. Ask yourself, any time in history, has there ever been a time when the US government, the banking sector, the entire economy, the World Economic Forum coming forward and saying that we're getting ready to do a leap and it's going to be disruptive and it's going to be sudden and there's going to be a lot of pushback and there's going to be a lot of upheaval and there's going to be drama and it's going to be violence and there's going to be unstabilization and there's all these problems they're going to create. They're going to create it. Why else would Warren Buffett liquidate everything he has as the market was creating the highs? Why else would that man do that? Like he could step down and retire and leave the reins to someone that's his superior, and not his superior, but his I guess, next in command at Berkshire Hathaway. To, hey, here, you have the reins now, and I'm going to counsel you, but I'm not going to actually be part of it, all that stuff. He's liquidating that stuff. He's liquidating that. That, to me, as an investor, signals huge ramifications are underway. And he's now below reporting levels. So anything he does, you're never going to see. You're not going to see it. So why do it? And any time in history, look back. Has there ever been a time in world history, American history, that we have had a climate like we have right now? Look what we just came out of with COVID garbage. That fucked everything up. It messed everything up. And now the chickens are coming home to roost. Everybody's been corrupt in every government. Why? Because they're literally raiding the treasuries of every country. They're raiding everything. They're taking whatever they can because they know everything's sinking. Everything's going to sink. And that's your crypto shit too. You're going to see what Bitcoin's really all about. You're going to see what all these cryptos are all about. There's no faith in anything right now. Not to see it appreciate. Who wants to accumulate new longs at these lofty levels with so much uncertainty, such a degree of corruption, not just in the United States, but everywhere? What country is doing it the right way? None. What government has it together and you feel like, I want to buy their bonds. I feel safe investing in that country. No way. There ain't nobody. It's all messed up. So I am not of the opinion that we're going to make new all-time highs and keep on blasting off and be bullish. I think we're seeing something very large scale that may be a multi-year bear market, but it could be quite painful. I'm not smart enough and I'm not stupid enough to come out here and say, I'm going to time it to the day. I just know I'm stepping the fuck out of the way because I know a Mack truck is coming and I'm not going to play chicken with it and dare it to run me over in front of the public or lose money on doing it. It's better for me to step aside and say, you know what? This is just lining up perfectly with the time of the year. I take a breather and move to the sidelines, and I'm watching with great interest. But I'm also reminding all of you who are trying to be active, man, you got to be real careful. You got to be real careful. They're talking about doing tests on nuclear weapons. Like, come on, man. They're telling you what they're going to do, and I've said it before. You will see tactical nukes used on U.S. soil. Whether it's us doing it, blaming somebody else as a false flag, or another country doing it, you will see that shit happen. Because 9/11, that shocked everybody. It messed everything all up. COVID, nobody's going to believe that bullshit anymore. So what's left? What's left? Nuclear fallout. Stay in your house because you can't smell it, you can't see it. And how many of you in the audience have a Geiger counter? How many of you can pick up rads and measure that in terms of radiation? You wouldn't know. But they start showing people dropping in the fucking streets saying, oh, look at this. You ain't leaving your house to go nowhere. And Amazon ain't bringing shit to you. So think about that. That's the level of shock and awe they have to do to wrestle people in control again, because they're asking to reveal all the pedophiles in this world. And they're demanding. We're not forgetting it. We're not going to forget about it, okay? People paid out $3 million, and that person eventually died of a freak accident. They always die. The Clintons come forward. They say, well, look, you know, we got evidence against the Clintons. Well, shit, their airplane, it just crapped out. It died. And now everybody on the plane died. They never have anybody ever make it to court. And now we're tapping Bill Clinton. What do you fucking think's going to happen now? Everybody that's been paying attention already knows what's about to happen. Something big is coming. Something huge is coming. And the World Economic Forum, who nobody elects, these fucking clowns are out there running the world, telling policies when they have nobody. But they have the power, they have the money, and they make shit happen behind the scenes. They're promising you. They're doing this leap forward, and they're promising you that it's going to be disruptive. They're promising you that shit ain't going to be right, but it's better. It's going to be better because it's going to be a great transfer of wealth. Do you honestly think these rich motherfuckers that run everything, you think that they're concerned about giving wealth? Why don't they fucking give their money away? What wealth transfer are they talking about? The money that we have in our 401k, in all of our fucking retirement accounts, and I've said this shit before, that's the last fucking kitty to rob. And what did they do? They fattened it up. They wanted everybody to pour their shit in there. Put more into your 401k. Keep really building up. And then all of a sudden, they're going to rape you, steal, and it's all gone. You got nothing. I got no more 401s. No more retirement funds. Fuck that shit. No way. Liquid. Goodbye. So sink that shit all you want. I don't give a fuck. If all these rich cats are billionaires, I'm not a fucking billionaire. But if the biggest one that's identified all around the world, Warren Buffett, is liquidated everything he fucking has, while the market was rallying up, making those highs, smart money does what? They have to offset and distribute their longs when price is going up. That's the only efficient way they can do that. He didn't have a couple shares, man. So if they're doing that, and he put himself below reportable levels, that means he can move, and his company can move below the radar. So you're not going to be able to track shit. You have no idea what he's doing. You have no idea what he's accumulating. You don't have any idea what else he's selling. None. It's completely off the radar. He turned his transponder off. You can't track that motherfucker now. Don't you see that as a warning sign?
Yes, I see it. Just, the gap up that we having, that I don't know if you saw the last hour or 2 hours, we had a huge run up, like 125 points on QQQ, because obviously futures were closed, but he disclosed a huge position stake on Google. He hasn't taken, you were right, he's been in cash all this time, but now he disclosed it, like a 5 billion investment in Google, and that's why he just, I think that the market is just gonna go up. But yeah, no, I get it. Question, Michael, so if you liquidate all your 401k, and with inflation, how we're doing, like where are you putting your money then? Real estate?
I'm not telling anybody what I'm doing with my money. I'm not doing that.
I mean, Mauricio's big into real estate, so he just wanted to know if you're interested in buying property in Miami, he's your guy.
Yeah, I just left Florida. I was considering getting something in 30A on the Gulf side, and we looked at a few properties down there, and some of the people down there saying that they can't keep flood insurance, and they're losing a lot of companies that are no longer sponsoring the flood insurance there. And so to me, it ain't worth it. It's beautiful there, but I'd rather not do it.
Thank you, Michael.
Fascinating conversation. We've been here. It's 1:47. So thank you. for being here, everybody, for listening. Thank you, Michael. It's been a phenomenal conversation.
If we could have a couple
Eh,
people come up and not need to have me say anything, I'm going to try to eat a bit of soup
Yeah,
here, and I
yeah,
might
no
want to
doubt.
compete with that.
All right, so we will have a series of speakers coming on, and it will not be to ask questions. Maybe just, I mean, you can ask questions, but we won't have the level of expectation that Michael will be answering them. We will be answering them amongst ourselves. If you have a question or if you just want to come up and say anything. So that sounds great, Michael. We've got Hunting the Wick patiently waiting with his hand up. Hunting the Wick, thank you so much for waiting. You're up next, buddy.
Hi. Thanks for having me, Kit. Can you hear me?
Yes, sir. We can hear you great.
Hi. Well, that's a shame. I wanted to ask Michael a couple of things, but that's all right.
Well, you feel free to ask within the community, and then we can talk amongst ourselves, and we can let the man eat his soup. And if he wanted to chime in, he can. Otherwise, we'll just have our convo. No biggie.
Oh, okay, sure. So, well, basically, something most relevant like to what happened this week and the last stream that Eve made. Why highlighting like this weekly volume imbalance where like it's part of a bigger PD arrays because there is a weekly imbalance, but there is also a FVG within it. And also there is something that is mentioned during the last like live of yesterday and during the space with the time expectancy of getting successful, profitable in the study. And yeah, well, me, I've been studying for 2 years now, very intensively. I think, yeah, in December 2025, gonna be close like to 7,000 hours. And I was hoping like to get to where I want before that, but I'm enjoying the journey and learning more and more about the PDRAs and understanding more about price. And other thing is like, yeah, I was wondering like if Michael was thinking about like, how can I say that, addressing more like time, because he was saying like, yeah, it's more about anticipating things, but the best way to anticipate is understanding the time element of price once you understand all the PDRAs or market maker model, the buy or sell
I mean,
one.
we've been provided
So
time
yeah.
already, though, haven't we? I mean,
Yes, more or less. We know the time. We know the kill zone,
I
but
need more.
I don't know. It's like I
Sounds
mean,
like you have an insatiable desire for information. Are you able to apply it?
I mean, no information, but I suppose like progress in understanding of the science that Michael is sharing with us. And at the level of Michael, I mean, he might not want to share it, which I totally understand because he already shared enough. But it's like it's almost what time price will do what time such and such PDRA will show up. So I wonder, not trying to asking too much as well, but if he's thinking about expanding on time, because I'm at the stage where I understand enough PDRAs and enough concept where now is the time element
Well,
where I
here's the
fell.
thing. Here's the thing. If you're asking about time, you haven't journaled. You just literally told the entire community, and
No, I
don't mind my
didn't.
French. I'm calling you out, son.
That's not
I'm
what I
calling you
said.
out, son.
No,
You
that's your
don't journal.
assumption.
You don't journal.
But
You
you just
just
assume
put
I do
yourself
have a
on
journal.
blast
I
by
do have a
saying you don't
journal.
journal. You don't document the times that these arrays are occurring. Because if you did, then you would see the time.
I
You don't
do
need the
see them.
time. You don't need someone to give you the time, my friend. It's on the chart.
I
All
think
you
you
did
miss.
is just tell us, all of us, that you don't journal.
No, that's your assumption. But do you mind me speaking?
It is my assumption, correct? It's my prerogative
Or
to have that assumption.
I mean, not your assumption, but your understanding of what I say, which I mean is totally fine. But I'm telling you that
You're
it's wrong
asking for
because
someone else
I'm
to validate
journaling.
what's on the chart when and something is static. Here's the thing: it'd be one thing if you were talking about something dynamic. Time is static, my friend. So when you want to know when a PD array occurs, it's right there on the chart. It tells you what time. You need to stitch together where and how these arrays and time correlate and how they sync together. That is your own study, my friend, within the information that's all the framework, the schematic that's already been provided.
Yeah, I rather understand it, but rather than you
If I
telling me
may,
I'm the
can you hear me?
Yes,
journalist,
sir. Yes, sir.
because I
Pretty
do
please, Michael.
journal.
Pretty please.
Okay, I heard what you were asking for, and I thank you for the opportunity to hurry up and scarf down this soup. But in deference to time, have you looked at the post I made on X, or I think it was a few posts with Bitcoin? Did you take a look at the chart and the annotations I put up?
Yes, I did see it. I see it
Okay. Did you
actually.
see the one chart where I actually had these little tiny little lines underneath it, and I was highlighting that's the 50 to 10 macro time, and it was creating the very lows of the Bitcoin run up during the market maker buy side of the curve?
Yes, I did see that.
Okay. So what more do you want beyond that when you apply the things I'm teaching you from a profile stance, from a narrative stance, reading market structure, all of the things that I've shared thus far, if I stopped talking about time, you have more than enough. I think that there's a pursuit in the teaching part of the internet that's teaching, trading my stuff, other people's stuff. There's this Pandora box that's been opened up about time, and everybody wants to find the right time. The right time is really going to be determined by what you're seeing in price action at the time of you in front of the analysis, doing the trade, whether you're not going to take a trade or not. And the sessions, the kill zones, the macro times, all those bleed together to give you all the reference points that you need in specifics about time. I don't have anything else I'm going to provide publicly on the basis of time than what I've already given. And the only thing I'm going to do in written format is this is what I'm looking at this time and why I look at it for this purpose and this purpose only. And this is what I look at for this, and I look at it for this purpose and this purpose only. So that way it's a structured view of it, why I use it, when I look for it, and what is it supposed to give me in terms of insight? How's it useful? But it's already the same things I've already taught. Okay, it's the times, and I'm giving you examples. So if you are going to buy a book that I wrote, okay, don't do it. I'm not telling you to do it, but you're going to discover everything that's in those books I've already taught you. It's been given to you for free. It's in lectures, it's in videos, it's in spaces that, like Kit has hosted stuff. I'm answering questions like this. I've already disseminated the information. It's there. I think what's happening is there's this pursuit of individuals that are trying to find something they can teach on and or supply to a like a subcategory of the community rather, maybe behind a paywall or something, and they want to have a new gimmick, a new little hook or something. Or maybe, I'm not saying that you're doing that, maybe you are seeing that being done, maybe in your neck of the woods, and you're thinking, well, I'm just going to ask Michael and to circumvent the whole need to join this service because maybe they're touting they have something that's previously unrevealed, or it's part of some horse shit that they said that I'm keeping away from the public, but I taught in private mentorship. Everything's on the YouTube channel. Everything that relates to time, I've talked about. There's no more further revelation I'm going to provide around it. The only thing is what times I'm looking for them to be influential, and those times have already been revealed to you. The macro, the 8:30 news embargo lifting, the opening price at midnight. These are all static things. They're not changing. The opening ranges, and that one caveat with the morning session, it's being treated slightly different. So I don't think there's a need for anything more. And if you feel like you need it, what have you done with what you already have?
No, I think you're totally right, Michael. You spot it right. It's like this thing that is currently like trending, and I'm also a student of so trying to understand or having a deeper understanding of what you're teaching. So it's like just trying to pay attention to things. So that's why I was just wondering. But yeah, thanks for clarifying this. I believe
You're welcome.
that it's clear. And thank you, Kit.
No problem, brother. Love having you on. That was a good question. I like it. We got Chartist with his hands up, Vanessa with her hand up. Let's hear from Vanessa, Magic Lines. How's it going, Vanessa?
Hola, buenos días. ¿Me escuchan? Good morning.
Sí, te escucho bien.
Los saludo con mucho cariño. Happy Saturday morning. This is my first time on a space, so forgive me, ICT, if I sound a little bit nervous. Am I doing this right?
You sound exactly like I imagined you would, by the way.
Thank you. I'll take that as a compliment. I am a little bit under the weather, but I just wanted to join to connect with people who study deeper behavior of price. And so thank you so much, Kit, for the mic. I approach the markets from a structural perspective and focus on motion and not signs. And to me, price isn't even random. It follows like an internal rule. And once you understand those constraints, everything else is noise. Sorry, I'm also cooking chorizo con huevos on the background. Yeah, a little bit late for my morning breakfast, but your work, Michael, has helped a lot of traders look beneath the surface of liquidity and imbalances. And doing my own research, I found that there's a deeper architecture influencing how price expands, contracts, and transitions between states. So for me, the market isn't unpredictable, it's obedient. And I think I've heard you say that a few times before, but correct me if I'm wrong. But once you see the structure behind the movement, the chart stops surprising you. And Michael, I just wanted to say like my respects to you and your work because it has opened a lot of doors for a lot of traders to even consider looking even deeper in the charts. So you make people pay attention to the layers beneath price. And that contribution is undeniable. And I just wanted to show my appreciation to you, to your work, to your discoveries, to your hard work or through all these years. And I don't want to take anybody's time or space here. This is my first time ever on a X space, and I do feel a little bit nervous, but I just wanted to
That's
show some
okay.
appreciation.
We appreciate you. There's a rule called Fight Club, and you just broke a rule in Fight Club, but we love you
Okay,
anyway.
okay. Thank you so much. Have a wonderful Saturday, everyone. Ciao.
Yeah, no, it's great. Thank you. Thank you for breaking our very affectionate rule for Fight Club. You did it very well, by the way. So I think it's okay. I think it's okay. So we got Pippi here. I mean, Pippi's going to be full of gems. We got Chartist with his hands up. Market Oracle still has his hand up. We have a lot of folks here requesting to speak. I'm going to bring you up. Pretty please ask a good question. Can I just leave it at that? Like, appreciate the time you have with Michael. Pretty please.
We got till 2:30, so that's 30 minutes that I'm going to escape. What does that mean?
Nice. And what
Is
we'd
that a
like to
cue
do
for me?
no, it's not your turn. Chartist, you're up next. Chartist.
All right, yeah, is my mic working correctly?
Yes, sir. We can hear you great.
All right, thank you everyone for this insightful space. I'm going straight to the question. My question is about IBDA data ranges. So given the effectiveness of IBDA data ranges on the daily and weekly charts, can this same concept be applied fractally to lower time frames, such as the hourly or 4-hour or specific trading sessions? If so, how might we run the gradient levels on the lookback period? How would the 20 and 40 and 60 days be proportionally adapted or translated for these shorter time frames? And if this concept can indeed be factually applied to these lower time frames, Are there specific hours or periods that should be intentionally excluded from the data range calculation, like maybe a period of time distortion or something like that?
That's
So
a great
that's my
question.
question.
It's a great question, Chartist.
Okay, short and simple answer is that the 20, 40, 60-day look back is specific to daily ranges, and it is not fractal in the sense that you can apply some kind of a look back on the lower intraday charts. So you can save yourself a lot of worry and concern about that. There's no application, at least not from my perspective. I don't do it that way. You're looking back last 20 days because it's simply just 1 month of trading. No weekends, Monday through Friday. It's 20 trading days on average. And then 40 days is what? The average of 2 months. Not perfect, but that's what it is. And then 60 days is just simply 3 months. So that way you're looking at the quarterly effect, and you're constantly measuring the supply and demand factors that move inside of all markets: commodities, energies, equities, all this tug of war of where all money flow is moving from one sector to the next. So by having that macro perspective of 60 days, you're always at least incorporating the last 3 months of trading in all intermarket relationships. So there's no intraday aspects to the look back.
Thank you so much. That was straight.
Great question. That's a really good question, buddy. Good job.
Thank you.
Pippy B, jump up. You got a question? You got your hand up? We got about a half hour left with Michael here, so we'll be bringing folks up. Quick to the question, if you don't mind.
26 minutes.
Yes, and counting.
Hey, what's up, guys? How we doing?
Fantastic, buddy.
All right. I got 2 questions. They're very quick, though. Very quick. One question is, in regards to macros, right? Are there any specific macro times for the Asian session? That's the first question.
Ooh, that's a good one. That's a good one.
And the reason why I asked that is because, the Asian session has been more active of late, right? And, a lot of people are gravitating towards the Asian session. And, for people that work, the Asian session works for them, of course, with the London session as well. But I'm just curious if there's any specific macros in the Asian session. So that's the first question. And the second question is, what are your views on RTY? The Russell. I never really ever heard you speak about the Russell. So I'm just curious about, if you ever do look at the Russell, or, do you have any, thoughts on the Russell itself?
Great question.
Okay, the Asian session, if you look at how, for instance, think Forex, okay? Think Forex, you can do the same thing with NASDAQ after they've been online for another hour. So we have our break at 5 p.m. Eastern time, then it resumes at 6 o'clock. So letting it trade for the first hour, you'll have an opening range first hour from 6 o'clock to 7 o'clock. Not opening range in the sense of what I'm going to describe here, 7 p.m. to 7:30. That's your opening range for Asian session that can be employed for all Forex, commodities, stocks, whatever it is that's traded around that time, 7 o'clock to 7:30. So first presentation, whether it be an order block or fair value gap, breaker, whatever first presented PD array that you use, it can be applied throughout the entirety of the London session, going into New York and whatnot. The first full hour of trading 6 o'clock Eastern time to 7 o'clock, that 1 hour range many times will act like we teach the Asian range in my teachings for Forex. The idea of limiting it to just that first hour instead of several hours up to midnight, that allows you to have very, very small scalping discount and premium array sensitivity, not requiring a lot of time, because you want to be able to facilitate trades that are inside the 7 o'clock to 9 o'clock Asian range, or not Asian range, Asian session. You can push it out to 10 o'clock, but it's really better if you just only trade during the 7 o'clock to 9 o'clock, that 2 hour window. So if you're going to watch that first 6 o'clock to 7 o'clock time, watch what your pairs are doing, watch what the indices open up with and what they do, and if they start building some kind of structure that supports higher prices or lower prices, that high and low that forms between 6 p.m. and 7 o'clock at the restart on indices, and the high and low that forms in your Forex pairs, that's many times used between 7 o'clock and 9 o'clock's trades for Asia. But if you're asking specifically for the opening range for that time, if you want to be like a 9 to 5er that comes home, does his business, sorry, I had to sneeze. The 7 o'clock to 7:30 will give you your opening range first presentation. So you can use a fair value gap play to catch a swing from 7:30 to 9 o'clock. So you have like an hour and a half, 90-minute window to find the purest run in Asia. You'll find setups every day doing those types of things using the information that's provided there. So I think that's answering both of your, if I didn't answer both of them, what was the other question I didn't answer?
Well, you definitely answered
Russell,
that question. Thank you for that.
Yeah. The other thing was
Yes,
Russell.
Russell.
I don't do anything with the Russell. I've not had any real interest in it. My students asked me when I was doing private mentorship, do I consider anything in it? I don't have any affinity for it. I'm not saying it's a bad market to trade. I'm just not interested. The 3 averages are enough. The Dow, just for barometer's sake, and the NASDAQ is the tradable execution market vehicle, and the S&P is the better, weightier average that kind of confirms or negates the ideas I suspect in the NASDAQ.
All right, thank you. I appreciate that. Thank you so much.
Keeping it going, Gatey Trades. You're up, buddy.
What's up, guys? Can you guys hear me?
We can.
What's up, Michael? Thank you for everything. I don't want to waste anyone's time. My first question is, how much weight do you put on the dollar's intraday price action, say on like a 1 or 5 minute time frame, when you're watching the morning session? If there's a lack of correlation, meaning if it's meant to be risk off, but maybe both the dollar and the NASDAQ are moving lower, how much of a red flag is that? That's my first question.
I like to keep the dollar index around a 5 minute simply because it's a very thin market and it can be exaggerated. A lot of the 1 minute inefficiencies or volume imbalance, you'll see a lot of volume imbalances on a 1 minute chart in dollar. It's too much.
Yeah.
So I kind of like smooth that out by going up to a 5 minute. And the importance of where we're at profile wise on the daily chart. Where are we at? Are we in a range? Are we looking to move higher? Are we part of a larger scale weekly buy program or sell program? And keeping in the vein of that focus, whether or not these types of occurrences in price action in dollar should be elongated, or are we just going to be moving around inside of a predetermined? Like right now, if you look at what we've done for pretty much the entire year, we've been in a range for a dollar. It hasn't really done a whole lot. Now, if you zoom into a 5 minute chart, it seems like it's doing a whole lot of stuff, but it really isn't moving a lot. But the Forex pairs are allowed to be moving around a lot more in comparison. So that's the first thing you have to at least refer to, because if you're not considering that, you're going to place too much emphasis on the willingness to support or negate the idea of a run in indices or in Forex. So said in a different way and simply, if the dollar index is in a trending model where it's moving and it's going to continuously keep moving, not stay in a big block range like it is on its daily chart. If it's going to stay like that, then I'm going to demand, an hour chart, not a 15-minute chart, not a 5-minute chart. I want to see something really be negated on an intermediate term intraday chart, time frame like that, or a 4 hour, but more specifically like an hour. Otherwise, if it's in a trending model where it's allowed to be moving a whole lot more and it's not held in this big range like it's been for months, then I will expect that a 5-minute chart and any SMT divergence there would be indicative of supporting or negating an idea that should be seen as risk on or risk off.
That's honestly a perfect answer. Thank you. I have a second question, if you don't mind. It's actually about journaling. So I've been a student of yours for quite a long time now, and I have been journaling for a very long time. But I am very, very OCD when it comes to wanting to encapsulate like everything in my trading day, and I just can't seem to find, like kind of balance or like a homeostasis where I'm able to write down everything that I want to be able to write down for that day. I don't know if you have any tips or advice on journaling and maybe just like the main important things that you want to keep, just to make sure, I am keeping track of, the most important things. And I feel like I am for the most part.
Can you
But if
give
you have
just,
any comments on that.
could you give us, list like maybe 5 to 10 of the things that you feel that are the most important things that you're concerned. I'm not asking for your commentary. I'm not asking
Yeah.
for the things that you build yourself up on a personal level. I'm saying in terms of annotations, what do you gravitate to from 5, this up to 10 things? It doesn't have to be 10 things, but what are you finding
Of
yourself
course, yeah.
doing?
Well, I always start off my day, I trade after 9:30 every single day. So I always start off with just key highs and lows or imbalances that I think could be relevant. So I usually just label them as like just whatever's in close proximity that I think could be in play, whether for a move higher or lower that day. And sort of pre-market plan, just like I like to go in with a certain idea of what I would like to see. And that doesn't always unfold, but if it does, then it makes trading really easy because sometimes you're just able to anticipate, the whole morning session and it just plays out like that. That's all pre-market. And then after that, what I like to do is I usually just journal if I take any trades or if I miss any trades, I'll go back and annotate the setups. I have a very specific model. So I usually just journal the model and what it did. But then I notice like other things, that maybe seems to be missing. Like I don't know if they're relevant to put in. So usually what I put in my journal is the PD rate that was used for entry, the time that I was used to enter, the move that I was anticipating, and the target I was expecting to be reached. I do use standard deviations in my trading. So I want to see if I'll, just aiming for something too high or too low. And then my main journaling is after trading. I usually just mark up the morning session and basically what it did. So to list a couple of things, for example, if, we had a time distortion and maybe I was anticipating a move to occur, but then it did not really occur, I would just say, well, maybe the time wasn't right, and although it's not always clear at that time, maybe later in time when I go back I can maybe identify like why the market was not moving at that time, waiting for some sort of whether it was news or something. Any key PD arrays, I like to just focus on the imbalances, so anything that I found was relevant, maybe in discount or premium, obviously depending on what side of the market moved. And also just I guess also the lunch session as well. So same thing for the morning. I postpone it into lunch because I do find a lot of the time the move I'm anticipating to happen, in that silver bullet hour or going into 9:30 does get postponed to like 11:30 or 12:30. Usually when I'm not anticipating a move. So then I have to annotate the lunch session and say, okay, well, I was right about the general direction, but the timing was off. I
Are
don't
you
know if that
recording
answers your
any of
question.
the, are you recording anything that relates to the opening range and the disparity between what price looks like on regular trading hours and electronic trading hours?
Yes, I do have the opening range gap. So in terms of levels, I always mark out the opening price at 8:30, 9:30, and midnight. Any close proximity, new day or new week opening gaps, and the opening range gaps. Those are the levels that I use personally every day.
Okay, that was what I was going to say and suggest if you weren't. Everybody should have at least those things every single day annotated on their chart. And the majority of your journaling should be how the daily chart used that very information to create the open, high, low, and close of its daily range. By doing this on a day-by-day basis, you're saturating your understanding of what price is doing day by day, and it's in your mind the very next day because you've recorded it. You spent time looking at it. You annotated your chart. In terms of the initial question you mentioned or concern you had, the idea of making better use of your time, not trying to do too much, what things you should do, what things you shouldn't be doing. I think that each person's going to have a question or concern. How to determine bias is the number one thing that comes to me. Like how to know if I'm going to be a buyer or seller for the day. And the way you get better at doing that is through annotation and logging how that daily chart formed its low and its high. If you're bullish, you're worrying specifically about annotating where the low forms. When you're bearish, you're worrying specifically about where the high forms. How does it form? What PD arrays is it using? How did it engage the opening range gap? If there was one, if there isn't an opening range gap, what did it run up through or to before making its move? So your annotation should be focused primarily on answering confusion or doubts around something that you don't have a good grasp on. But having the signature concerns, what we talked about was the opening range gap, the key opening prices, the quadrants of the opening range, and then the disparity between regular trading hours, price action, where their highs and lows are, and then the electronic trading hours. Because electronic trading hours, if you haven't paid attention to the lectures and shown what I'm doing in the live streams, if you're not paying attention what regular trading hours highs and lows are, see, when you look at just electronic trading and you wait for the 9:30 opening bell, you're going to see nothing in terms of the disparity between where it closed the previous day and where we're opening at 9:30. It just looks like nothing's changed. And you won't appreciate the previous day's regular trading hours, highs and lows, where liquidity is resting. The overnight hold idea is that you're going to refer back to those same reference points that's in the regular trading hours chart. So by having where you're at in opening at 9:30 Eastern time, where is the relative equal highs, relative equal lows, and singular high and singular low in close proximity looking to the left at where we open at 9:30 Eastern time. If you don't have the regular trading hours chart opened up, you are missing that piece of that puzzle, because that's what's running many times. And you see these guys getting blown out on their live streams, and they're like, man, I don't know, because they're not looking at even my students, I'm not going to sing their names, but many times I'll pop in and I'll say, pull up the regular trading hours chart. I'm trying to coach them to like, look, you're not seeing everything right now. Go to the regular trading hours chart. So if you're not having at least the regular trading hours chart printed out in your, not printed out, I guess it could be printed out, but getting screenshots with the annotations and then recording what the opening price was at 9:30 Eastern time, that's when electronic trading hours begin again, you won't begin to see how that first hour of trading in the AM session creates the low on down days, I'm sorry, up days, and the highs form in the down days. So you can make this into rocket science and inundate yourself, and then you'll get burnt out and not want to do it. But these are the things that I think that every student should be doing. And even someone that's consistently profitable should be doing this as a general practice every single day, because this is the meat. Like this is the meat and potatoes of what you're trying to do as a trader. The information that you're looking for, the answers to all the things, the questions, the mysteries you want to have solved comes from having this information logged, becoming used to it, and then you see the rhyme and reason that it repeats. The same logic is always being utilized with these same reference points. Is this, how are we working towards creating that daily range? And each day is going to form slightly different, but it isn't such a wide disparity between the variations in it. It goes down to the lower quadrant of the opening range. It doesn't fully close it in, or it closes it in entirely, and then that's the low of the day. Or it'll run through the opening range gap low, and then do 2 times the opening range gap low, then create the low of the day, and then work back up inside the opening range, and then you have the PM session using the opening range upper quadrant to support bullishness going into the close. And then you have this explosive run into the last hour of trading. You can discover those things after journaling it, and you'll see they repeat. They're not repeating every single day after day after day, but you'll see, oh, this is exactly what it looked like when it did this before. They have the same playbook all the time. It's the same things repeating over and over again, but they slide them in and out. Unless you're looking for it and logging it, you won't become accustomed to it to notice the pattern that's it's being replicated many times in a month.
Thank you. That was absolutely amazing. And I don't want to take too much of your time, but just to follow up on the journaling, not that that wasn't exactly what I was looking for. I know you said on a recent mentorship, I don't know if I was watching old stuff, but you talked about positive reinforcement in the journal, rather than like saying, oh, you did this poorly because your brain just naturally will click with that better. What does that exactly look like? I don't know if you can kind of elaborate on that just quickly. Like what is in
It's
terms of like
positive
wording the
self-talk.
words in your journal?
Yeah, positive self-talk. Did you listen to the X space that I did today?
Only about the first half, but I did hear you brush on about it. Yeah.
I used an example of it where I said that I'm not in the opinion that we have to view ourselves as being good losers. You have to
Yeah,
learn
yeah,
to
I remember
lose
that
good.
part. Yeah.
Okay. And then I said, instead of saying that, and it would be better used to support ourselves and basically encourage yourself like a cheerleader to say that I am permitting myself to be imperfect. I exercise my right to be imperfect. That way, it's very liberating. It doesn't come across critical to your subconscious because your subconscious is a big filter. And what happens is, and if you've a wonderful research study that you can do that's outside of trading, but it's hugely beneficial for psychological reasons, for understanding yourself, other traders, is looking into the power and influence of self-talk and negative thought. Because what you do is you charge your subconscious, which is an amazing filter. And if you train it to look for positive things, it's very hard for you to get stressed out. And when you buy a brand new car, you love your car, it's wonderful, and then you're angry because everybody in the area bought the same car you now have, but they didn't. They've been out there, but because you bought it, you've activated your reticular activating system. So your subconscious has said, I really like my Z06. I really love it. I really love this color. I bought it. I love this car, and I want everybody to see my car. But what you did is if you opened up your subconscious, so now you want to see your car everywhere. So is it hard for you to find your car now? No, it literally leaps out in front of you, and you think you're seeing it all the time. Now suddenly everybody bought that car, when in reality you just changed your perspective. Now, what do you think happens when you say, I think my wife is cheating on me. I think my spouse is having an extramarital affair. Anything that they do, you're going to suspect as supporting the idea that their infidelity is absolutely underway, and they may not be doing anything. You see the power in that? It's double-edged sword. You can make yourself extremely powerful in perception, but you could also set yourself up for failure by giving yourself toxic thinking. And an example in this in trading would be, you're looking at something in price action, and maybe you're tape reading, and you think that you are looking at a fair value gap that may support price, and there's discount sensitivity there, and you anticipate it creating another price run higher, but it doesn't. It trades through it. Well, what do you have there? You have an opportunity to exercise this concept. You go in and you report that. At the end of the day, you say, okay, at this time, I was watching price action, and I was surprised that this fair value gap didn't hold. But this is an example of why we have to use a stop loss. If I was going to buy that, my stop loss would have been here, and I only would have suffered a loss of this much amount, and that's a positive. I had a limitation, and I didn't trade aggressively or without a stop loss. You see what that just did? You identified that thing as you thought it was going to behave a certain way, but then you gave yourself permission to be imperfect. You didn't criticize yourself, and you looked at it as a discovery. You said, I was surprised that this one didn't hold up, and I only would have lost this much if my stop loss is where I placed it based on the concepts that I'm learning how to use. And that's a plus. That's a good thing. I didn't trade without a stop loss. I would have not traded without a stop loss, and the criteria fits the model, and my risk parameters would have been well in line.
That's perfect, ICT. Thank you.
You're
That
welcome.
answers all my questions.
We got time for one more. We got Rick Free, Flocka here. Flocka's got his hand up. Rick Free's been all up in my DMs. So jump in here, Rick Free. I like your question.
Hi. Hello from Malta. The question, I'll go straight to it. CBDR, Asian range and flout. That was a concept taught by Michael in the core mentorship and down in the chat the content. And I don't think he explained further about that over the years. The thing is, the question I have is that the concept works in indices. Can you hear me? Because I'm on the car.
Yeah,
Can
we
you
can
hear
hear
me?
you fine, brother.
Okay, you guys just stop on the side. The concept works beautifully even on indices. Michael gave some instruction on the ranges, in numerical ranges, to use, either if to use the flout or the Asian range or the CBDR for Forex in pips terms. I try to convert that in points for indices. Doesn't work, and trying all the conversion and searching on the internet doesn't work. Plus the NQ ranges compared to Forex, they're so much wider. And I built my own indicator because, as ICT explained, for those 3 different ranges. Of course, we know half of the standard deviation. You look at those in hindsight, day in, day out, the precision is insane, but without the discrimination. Indicator where you can add multiple instances of those indicators on TradingView. So basically, it does the job to manually trace all the standard deviation, all that. I can let's say have the indicator with the CBDR for Tuesday, and then I use the Asian range for. I'm a bit struggling how to really use that on indices, but I can see in insights that the precision on the standard deviation, it works. I'm just struggling with the concept, and that the concept was not developed very much over the years. That's it. I'm finished.
By who? Go ahead, Michael.
I honestly didn't hear much of anything that I could frame a response on. I'm sorry.
Yeah, Rick Free, you were breaking up. I think his question has to do with the CBDR and those time-based ranges and how they are relative to the indices. And if you have further insight on the specifications that you provided within the Forex with the range greater than 40 pips or less than 40 pips greater than 20 pips criterion core content month 8.
I couldn't begin to have the whole. I couldn't give a fair response in the little bit of time we have here. But I tell you what,
That's fair.
when I come back in February, I'll start off with things like that. Is that fair?
Yeah, that's great. I think that's great. I think that's free. That's great. And it's 2:30. We hit our time. And I just want to say from the community, Michael, thank you for being here. And I want to definitely be respectful to your time and just eternally offer gratitude from myself and all the other speakers and all the other folks who didn't get an opportunity to speak. Thank you for being here. Thank you for utilizing this platform to communicate with the community. So at 2:30, unless there's anything else, I think we're going to leave it here.
Awesome. Have fun. Take care. Be safe.
Thank you. Peace out, everyone.